Wednesday, December 4th, market analysis, Standard. Good morning, 9:50 California time, about the middle of the trading day traditional session. We see the S&P 500, and this is a daily data chart here, has just gotten overbought again, similar to what it was around November 11th. So I am looking for a modest short-term downside correction, very possibly similar to what happened in the latter part of November, last couple of weeks. Maybe back down to the bull trend line, the bottom of this upward slanting wedge. They're not quite parallel lines, so you really can't call it a channel, but they're close cousins. And then higher. The last couple of months of each year normally pretty strong. November and December because of the October lows, which happened late this year. And they weren't really a particular low of any consequence. September 11th, we had a bullish engulfing, but on October, you had two modest lows. So this year, it didn't work out quite the way I was expecting. If you look at the last couple of years, they were incredibly profound. So we're going to get a downside correction soon, I expect, because of the overbought condition. Look at the 1-minute chart. We are making, in the last 60 seconds, a new high for the day, a new high for the session. So don't get too optimistic too quick. Don't go short right away. Look for some convincing downside price action, reversals, etc., and still allow you to put in a reasonably minimal risk protective stop. Okay, looking at the SPY, we did gap up this morning. Nice. Upside gaps in this situation, getting into overbought condition also are very often exhaustion gaps, meaning the high day or very, very close to the high day. Not quite up to the resistance line. We could bump against that. And the downside correction again, I think is going to be in the ballpark of 585, maybe 590-ish in the next week or two. But I'm basically bullish. Can't fight the trend. Trend is your friend. Up, seasonality strong. No indication of any major top at this particular point, other than modest downside corrections, which is typical in a bull trend. Spider 1 minute. We should come back down to about 604 and a third to close the gap. And that would actually be, 604.11. Yeah, 604.10. Basically the high of yesterday or the day before. And with the QQQ, we also have an upside gap into overbought conditions. Now, all of them so far are overbought. And some have this exhaustion gap. I think it's an exhaustion gap before it starts to turn down. So be very wary. This is not a price level at which, under these price conditions, that I would want to be a buyer, unless I'm buying a put. Okay, so QQQ 1 minute, yep, needs to come down, should come down, probably will come down to 516.5, closing the gap. And maybe even a bit lower than that. 510 looks very, very reasonable, and even a bit lower. Going back to the daily for the QQQ, I have to think of something around 503, maybe even a hair lower than that, but in that ballpark. QQQ 1 minute. Now the NASDAQ is also overbought. So far, every single one. No particular gap here, close, but not quite. And very close to the top of its upward slanting channel or wedge. Again, they're very similar patterns, and they usually produce about the same results on the average. So I'm not looking for a major downside breakout here of this formation. I'm looking for a test to the bottom of the formation and back up again. But being overbought near the high of the formation is classic. Like something like back in here. And it didn't last very long, but that's what I'm looking for. Now the NASDAQ, 1 minute, close to the highs, nothing there. Don't have anything super bearish, but modestly corrective bearish. YM, guess what? It was overbought for 5 days, up until yesterday and today. So it qualifies for the potential of a bearish engulfing, just like all the other charts I just showed you. And if for some reason the markets fall apart and get below yesterday's lows, then I will have a bearish engulfing ER sell signal and become a bit more bearish. Not just a little correction, maybe a bit bigger one. But again, that reversal has not happened yet. It just could. Next. And the YM 1 minute, big pennant last couple of hours, sideways, but on the average, very strong. And the Russell has bumped against the high of its formation already a week ago in overbought condition after an up gap. Does that sound familiar? And we have started to slip off, and today we made a lower low for the last approximate week. Momentarily, it's higher on the day, nowhere near oversold, looking for a little bit more on the downside. And again, maybe again back down to the bottom of this trading range, 2283-ish. Wouldn't be surprised. And look at the 1 minute chart. Starting to show some weakness. Not a heck of a lot. Okay, bonds. So far, I'm on track for this gigantic, major, long-term bullish double shoulder, head and shoulder bottom. First shoulder, October 23. Second one, March 23. October 22. Then the second shoulder, inside shoulder, as it's also called, March of 23. The October low is the head of the formation with a bullish engulfing ER buy signal at the very bottom of this move. Now it's over a year later, and I still hit the bottom to the day with my signals, this particular signal. Inside shoulder, April of 24, and in the last few weeks, I think we made the last shoulder low on this gigantic head and shoulder bottom, which has a minimum upside objective of 150. Excuse me, 150. Maybe take 6 months or a year. A long-term bullish projection. Lots of up and downs between now and then. The 10-year notes, same formation. Everything is basically the same except for the prices. I'm looking for a move up to 126.5. Long term, probably over 6 months, maybe a year or even more until it gets up that high. But that's what the chart formations say. And so far, they are on track. Minor downside correction shouldn't last more than a few more days, shouldn't go very much lower, and should turn up and make new highs pretty soon. Well, a week or two, maybe sooner. Crude oil energies, a little rally between a rock and a hard spot, resistance above, support below, stopping rallies, supporting breaks. We need a breakout and or some significant signal one way or the other, so I'm kind of neutral. The longer term picture is also very unsure. Lower lows, higher high, nowhere. Didn't make a lower low, didn't make a higher high, did not make a lower low, did not make a higher high. Made a lower low over several months, but it didn't have any follow through, did not make a higher high. Major bear trend line stopping it. Doggone cough. So, what do we got? Sideways. There is definitely in heating oil a downward slant here in this downward slanting channel for the last year and a half or so. And as a result, you basically got to maintain a longer term, intermediate to longer term bearish stance. So I am looking for lows around 2 to be tested, and probably this major historical support level around 1.9 to 1.94 to be tested in the next couple of months. Basically bearish. No signal at the moment. I need some new low closes, which looks like it could happen at any moment because we are right on the edge here. Next chart. We got the natural gas. Now, I can make a case for a bullish formation developing, but again, I'm premature. I see these things before they finish early in the stages, and that can be a problem because I'm too early. So I have to be very careful as to how to explain what should happen if I'm going to continue to be right. And in this case, it could dribble off a little bit more to 2.9 and hold and starts to bounce back up. Now, an upside breakout needs to take place at above 3.7 to get this big rally going, which would be up to probably 4.5 to 5. But again, we have plenty of time here. It's going back and forth. We're not oversold yet. It could dribble off a little bit more. Wouldn't be a damn bit surprised. The other pattern I caught, head and shoulder bottom, worked great. Excuse me. It took 1, 2, 3 days to reach its minimum upside objective. And all of a sudden we have a bearish engulfing and we're still in that short trade. Great. Our trailing stop is coming down constantly. Intraday as well, every few minutes, every few hours, whatever appropriate. The code does the job for me. I don't do anything but watch, unless I want to make a profound change in the way it moves. And I could if I wanted, but that's not the idea with an automated trading system. Next chart is gold, silver, platinum, copper. Now, gold, silver, and platinum may be developing top formations. Again, a little premature. What do you think? Is that a shoulder here approximately the late part of September? 2 parts to it, sort of. There are 2 parts to the head, sort of. And there is a single and a major bearish engulfing on top of that rally high here in the last shoulder, which is okay. You don't have to have 2, 2, and 2. You can have 2 parts, single and 2, and that would be common. Or maybe it's only going to have 1 part to the last shoulder, as long as it's basically there. Rounded top, low, new high, low, not a new high, approximately in the same price levels as the first shoulder. Excuse me. And the timing is approximately correct also, because these are symmetrical patterns. My favorite pattern, head and shoulders, tops and bottoms, big and small. I've seen thousands of these, literally many thousand. Been 53 years. Now, all I need to do is see it to break down further. It should not go sideways much more time at all, and that goes for silver and copper as well, and platinum, not copper. And if we get a rally, then maybe the second part of the shoulder, and it can't go too far. I'm thinking below 27.45, maybe again up to say 27-ish and down. But real soon, can't be more than a few more days or less. Next, silver. Little double high, sort of. And now a double or maybe even a triple high. Doggone it. Okay, so here we go. Not overbought. Needs to stop here. Shouldn't go much higher. Symmetry is okay so far. Timing point, and a little bit to the right, more than I would be expecting. This was just about right already. So this is actually doing a little bit of damage to this possible head and shoulder top. Too much more strength at this point would start to damage it. And I'm going to start to say, no, it's not a head and shoulder top. And if it is, the downside objectives are pretty substantial. In this case, it would be down to 24.99 or something, 25. And in gold, the downside objective would be 22.95-ish. Back to silver and now platinum. Downside objective would be 800. It is acting fine. The one thing, and it's a fairly significant factor, I don't like the fact that these necklines are slanted downward, and slanted downward quite a bit in gold. Otherwise, most of the body parts are there, and it's acting in general, all three on the average, okay. But I really want to see it drop into new low ground real soon here. Copper. Support levels holding. We gapped up this morning. Gaps are almost always closed, so I'm looking for a dip down to yesterday's high or a little lower. And if that does not hold and we start to go down to 4.04 or lower on a closing basis in particular, we could start to fall apart big time all the way down to 3.7. Now, if support does hold, which it's starting to at the moment, I mean, even though we're short from the top of the market, on a sell signal, you can see the red there on September 30th. We still have the short sale trade. We almost got stopped out around November 7th, but did not. And then it collapsed real quick. Stop started to move down, doing great. What can I say? Great trade so far. Let things alone, see if I can make more money, or it's going to eat up some of my profit and take me out of the trade. I don't have to do anything. I just wait. Next. So in copper, to review, I'm still basically bearish. I don't think the support's going to hold. The head and shoulder tops in silver, gold, and platinum could work and drag copper down with it, sort of, sympathetically. We'll see. Right now, I'm bearish because I'm short and support is holding a little. I'm not looking for much of a bounce. Now, beans, oil, meal, corn, wheat, cattle, hogs. So I think the support level right around 975, 977 is going to go bye-bye. I am short from 11.15. The sell signal was on 11.14. Our stop is not quite locking in a profit as yet. When we have, and if we have, the downside breakout on a new low closing for a couple of months or more, our stop will start to move down dramatically and probably lock in a profit on that same day. We'll see, but I'm bearish. Soybean oil, I think, is about to do the same kind of thing, although I can't rule out some kind of a longer-term bottom, but it's going to need weeks. So at the moment, it looks like at least it's going to slip off somewhat, if not just plain fall apart. Soybean meal, kind of the same thing. Support's holding. I don't see any reversals. I don't see anything causing me to talk about any major bull move here. Everything looks neutral to bearish. And now corn, there is a possible bottom formation. We are going sideways a little too darn much. I don't like the fact that it hasn't broken out yet. We should have broken out, frankly, on November 11th. All it did was test the neckline and drop right back down again. This is getting too far to the right. The shoulder's developing too much sideways movement. And I think it's just going to die on us and drop into new lows. And the head and shoulder is going to be erased completely and never work. But it could have. So I told you about it before. It could have. We bought the market on the bottom. Buy signal right there. October 17th. Next. Wheat, new lows. Not staying there at the moment. Support holding. Whoa, sorry. And we're oversold again. Support might hold short term, but the rally I don't think is going to go very far for very long. And I think this is also going to fall apart. Okay, cattle. Sort of between a rock and a hard spot. Can't make up my mind. Very neutral RSI. Not sure which way it's going to go. I do have a great trade in progress from basically the bottom on November 15th. We're long on our green bullish engulfing. In the meantime, because of this buy signal and we're still in that position, I'm favoring to some degree up to push through some resistance. Really got to get its rear end in gear here and start to move, or I might get antsy and start to raise my stop. Right now, it's just going flat. Longer term trade, of course. Hogs dropping off a chunk. Resistance line has now stopped this. I keep preaching about when you make new highs for weeks and months and more, you need to close above those previous rally highs in order to perpetuate an up move of several days more, usually. When you do what this did, make the new high and close below the previous high, especially closing lower on the day than the previous day's close, of course. And it tried it again yesterday and didn't do it. Now we've all of a sudden made new lows for the last 4 days, and I think it's going to come all the way back down to 82 3/4, and I'm not going to be surprised to see it go to 77. Next, SQ is the only stock that I've been showing you guys for a few weeks. I like it very much because it appears to be, in my opinion, a giant 2-year bottom formation at historically profound support, a whopper of a bottom, minimum pattern upside objective 134, let's call it. Next stop on the upside, and it wouldn't surprise me at all, is about 148.5. And I cannot rule out moving all the way up 192 and maybe even 285 on this $95 stock. It made a new high for the trend today. It has an excellent, so far, classic upside breakout, testing support, and popping up. Now, we did leave a couple of gaps behind, so it's not going to be uncommon for it to come back a little bit, close the gaps. After all, we're again overbought today for the first time in about a week, week and a half. So it could bobble back down slightly and then make new highs again. Normal. Next, forget it, and forget it. That's New York having troubles with the cocoa, coffee, sugar, etc. Back to the E-mini. I don't see it. There's just nothing stopping us so far. You got to be trend is your friend, bullish, except watch out. Overbought conditions, top of formations, gaps to close in some cases. All of these things are preludes frequently to a downturn. You guys have a great day and profitable trading to you.